Hello ladies and gentlemen, I'm Joseph Novichko, Senior Trading Manager with GDM. Today's outlook, firstly, we're going to start with the Asian shares. Slightly mixed on Wednesday, but of course traders are eyeing important moves in oil prices ahead of a flurry of Chinese data later in the week. Also tracking the markets on Chinese mainland were of course lower, with the Shanghai composite down about 0.2% and also the smaller Shenzhen composite index dipping about 0.15%. Investors are also awaiting important data out of China due on Friday, including industrial production, fixed asset investments and retail sales. Tracking the indices in Hong Kong as well, the Hang Seng over there was kind of flat. Also with the Japanese data showing machinery orders rose more than expected in June, in sign that companies were more willing to increase their capital expenditures. Tracking the core industrial orders for June were about 8% up on month compared to median forecasts that predicted about 3% increase. Also, the manufacturers' all orders rose about 18%, while of course orders from the service sector were about 2% up. The better than expected data failed to give stocks a leg up as was expected by major investors. Japan has relatively stronger yen weight as well. Japanese currencies traded about 101.33 against the dollar in Asian trade on Wednesday compared to the level over 102.2 earlier in the week. European stocks also trading lower on Wednesday as of course global investors tread cautiously considering the timing of the next interest rate hike by the Federal Reserve. As well, of course, the outlook for oil prices, which would be the main topic of today. The Pan-European Stock 600 index was down about 0.3%, as along the euro was little changed at 1.1115 after gaining 0.3% overnight. Investors were digesting the likelihood of an immediate rate hike by the Fed on the second quarter productivity, which was surprisingly fell by 0.5%. Tracking also the development of the UK currency, the sterling over there was effectively flat at 1.3014 within close reach of 1.2956, the lowest since July 18, hit on Tuesday. The pound took a beating after the BOE policymaker Ian McCafferty said more monetary policy easing was likely to be required if the UK economy declines further on. Gold in the commodity sector rose second day on Wednesday as investors sought hard asset on a drop in dollar after, of course, a report on weaker US economic data that increased the expectations that the Federal Reserve would actually have to wait for the short-term US rate increase. US workers' productivity fell for the third straight quarter in the spring this year, suggesting that the corporate profits may continue to decline and wage growth may remain sluggish. Gold was actually cleared off the resistance at 1346, which paved the way towards the 1340.54 an ounce reached in late Asian trade, and now is expected to trade within a range of 1330 to 1350 an ounce. Oil prices in the energy sector was stable early on Wednesday, with a global supply overhang still weighing on the markets, while of course talk of a potential producer meeting to discuss propping up prices lent crude some support despite being met with skepticism by analysts and investors. U.S. West Intermediate crude futures were trading at $42.11 per barrel, down about 60 cents on their last settlement. Also, we're looking at an upgrade of U.S. oil production forecast by the Energy Information Administration, which is forecasting an output to reach about 8.31 million barrels per day in 2017, up from the forecast of 8.2 barrels per day in July. The actual report of the Energy Information Administration is due later today at 14:30 GMT. That's all for today. Thank you very much for looking. And of course, track the oil prices. They're going to be volatile today. Thanks for watching. See you next time. Bye-bye.